It's June, and we have a market update for you for the Austin real estate scene. And are you waiting for prices to drop before you buy? Well, we've got an interesting article from JP Morgan talking about when will the crisis U.S. housing affordability end and how. So we'll talk about this article as well as we dive right in. I'm David Shapiro with the Shapiro Group and my colleague Lee Abraham. So let's dive right in. And wow, look at this. We've got the number of active listings spiking here in June up to 3,200, significantly more than we've seen over the past. And let's put some context around this by looking at some of the other ways that we can look at this.
So, David, those 3,224 listings, big spike compared to the past couple years. And as we look at monthly housing inventory, we can see the sales volume on that little bar chart, that chart there over on the left. Over the past 30 days, interestingly, pending sales are down. So over the past several months, that's been a leading indicator that has been up. And now it's down compared to the past 30 days closed, as well as the past 3 months. Still higher than the average sales per month for the past year. What does it all mean? Basically, you divide that 3,224 active listings by these various numbers of sales per month. You're basically looking about a 4-month housing inventory. And so we know that a balanced market is defined as a 6 to 6.5 month housing inventory. Here it's 4 months. Again, a relatively strong seller's market, even though it may not feel that way.
And here you can see it over time. So even though it was such a huge spike in the number of active listings, the velocity of sales, because we're taking into account how many are actually selling, we haven't hit the peak that we've seen around 5 months the last couple of years, although it is earlier, right? If you go back to June, this is when it should be low because of summer selling. So it'll be interesting to see what happens here.
So, David, that spike in the number of listings and even the jump in the monthly housing inventory up to 4 months or better really bodes well in terms of fundamentals for a strong second half of 2024 if we have some interest rate stability and the potential for an interest rate drop. So we'll talk more about it as we go forward, but I think that this is a very healthy sign, not only for consumers, buyers have more options, sellers have a more active market, which benefits them as well, but the overall industry itself and the public sentiment, if we were to see demand rise to this spike in inventory, we'd be seeing much different headlines around the country.
Yeah, that's for sure. And we see that here in the number of sales per month, which at 846 is down actually year over year. And normally we're recording this, in the first couple of days of the month and we're waiting for sales to come in, but we're actually pulled these numbers on June 7th. So this should be most of what we see for sales. And if you look back to 2019, because we use as our kind of the normal days metric, we're down about 35% in the number of sales. So that's a pretty significant reduction. I do like to remind people that means that 65% of sales are still happening. So the majority is still happening, but obviously huge reduction in the amount of stuff that's transacting and the movement in the market. Kind of feels like things are gunked up and it's just people don't want to sell. There's less people out there wanting to buy, so there's just less happening. And one thing I think that people think is that the prices are going to drop and they want to wait for that to happen. So I want to talk about this article that I came across. It's from November. So, we are not going to take stock in too many of the stats that they use because they are a little bit outdated. But I think what's most important is the theme here. And the first thing they say is here's how we don't think the crisis will be resolved. This is talking about the crisis in using U.S. housing affordability. Right, we all know, and they probably have some charts down here about what affordability looks like right now. And so you can see in 06, affordability wasn't great. And then, of course, we had the housing crash and crisis, and affordability improved. So it was good. And as we've, over the last 15 years, come out of that, affordability has slowly come back down to the 1991 to 2006 average, which is this dotted line here, right? And then the pandemic hit, and right when we first had the pandemic hitting, you can see that affordability actually got better because they brought interest rates down. Prices hadn't gone up yet. But then going into 2021, prices started increasing rapidly and affordability came down. And so here's where we sit today, below where things were in 2006 in terms of affordability. And the thing that they say is that we don't think the crisis will be resolved through a crash in home prices. So I think that's the biggest takeaway for anybody watching this video is that, they're echoing what we've been saying for a long time. And JP Morgan, they have a lot of research behind them. This is not going to be a crash in home prices that makes things more affordable. Instead, what they talk about is increasing wages to catch up with where prices are. And they think that that I'll show you the chart here in a second, but this is their projection. Now, the first line is assuming the blue line is a 1% fall in mortgage rates and income growing by 7%. And the second one is assuming that mortgage rates don't even change at all. And you can see the difference there is just, a year or something. But I'll show you, they actually have it broken out down here based on cities. And so Austin's right here. And so they think Q1 of 2028, without any change in mortgage rates, is when we're going to see affordability hit the average. And if there's a 1% drop, then it'll be Q1 of 2026. So it's really not that far off in the big scheme of a real estate market for 2 years from now for prices to be back to where they have been historically for that long-term affordability average.
Yeah.
So I will link this in the notes below. So if you want to take a deeper look at this, just keep in mind that they say that the stats are from September of 2023. So there's some numbers on here that we'll update and talk about the numbers, what they are. So they said that we're down by 15% from the all-time highs. And let's jump right back here to our stats and let's take a look at where we actually are. So the average sale price is up 1.2% year over year, plus up almost 1% month over month. And we're still down from the all-time high, which was 2 years ago. You can see May of 2022 was the all-time high for pricing, and we're down about 7% from there. We were down about 3.5% or something from April of last year, or April of 2022, and now it's down about 7%. So a lot less than the 15% that they stated.
I think it's really important, David, when we look at these media publications and how they're parsing out stats, measuring the current market to the peak is certainly valid, but it's really not the big story. The big story is what's the 5-year trend? What's the forecast 5 years into the future? And, that 15% decrease to me is a kind of a clickbait sort of a number that really isn't reflective, particularly when you're combining stats as they do in the national media of in-town, out-of-town, single-family, condo, all of the various things into one big bouillabaisse of statistics is kind of fishy. So I think that, keep that in mind as we're looking at some of these articles.
I do like the 5-year outlook because anybody watching this, if you're thinking about buying, you should be thinking about this as a minimum 3-year thing, hopefully more like a 5-year. And so in 5 years from now, assuming rates have come down a bit, wages have gone up, pricing should continue to appreciate. 7%, where we are from the all-time high, is a number that in a normal year in Austin, we have been able to see 7% appreciation. So there's no reason why a year from now, we're not back at the all-time highs. All right, let's keep going. Number of days it took to sell. So about flat from last year and down pretty significantly month over month, which is interesting to see considering the number of listings are up so much.
Yeah, it's a good indicator for demand, which appears to be relatively strong compared to the year over year and past month. And now we've got the new listings. We saw that big spike on one of our early slides. Year over year, over 15% jump, about the same as last month. And this will be interesting to track now, David, as we really, get into the third quarter here and get a real feel for how this market's going to start wrapping up for 2024.
And our sales price to list price ratio, perfectly flat year over year, and just down slightly month to month. So the stability indicator, so everything is, pretty stable despite what we saw with that one stat, right? 1 month change in active listings is not a trend. So so far everything is still looking stable, but we'll continue to report as we see if that trend continue or if that turns into a trend, I should say.
Right. The listing barometer reflects what's happening with the supply-demand dynamic, number of new listings each week relative to the number of pending sales. Is the market absorbing everything that's hitting the market or a fraction thereof? So everything over that 100% line in the bar chart means that for that particular week, there were more listings than sales. And you can see over the past several months, that's been the case. The pace last week was more robust than many of the other weeks. Let's look at some of the numbers, David, in that chart.
Yeah, so let's just look at some of the most recent numbers here. So new listings last week, 295 with 151 pending sales. So 195%. So almost twice as many listings as there were pending sales for the week. And that trend, it's been pretty high for the last 3 weeks. And it's just been consistently over 150% for about 2 months now. So we're seeing that inventory grow, which was reflected in the monthly housing inventory we showed earlier, up to about 4 months from previously it had been, 3.5 months. So consistently growing as, we've been seeing, although it is the middle of the summer. So we would hope that demand would pick up commensurately, which we're not seeing.
Right. And this is the big driver of the story right now, anyhow, over the past month or so, mortgage rates. So the Fed continues to flirt with the possibility of reducing rates. That sort of optimism, I think, is very healthy for the market. And we can see that as of our most recent Freddie Mac numbers, just shy of 7% for the 30-year fixed mortgage rate. When we look back, David, over the 52-week range, the peak was 7.8. And there's a big difference, as you know, and our audience knows, folks that have bought and sold real estate, that difference of 3/4 of a point when you're at the hairy edge of affordability is a big deal. What that article was basically telling us is that people's expectations change as time goes on and people get more used to numbers, and then reallocating the fixed amount perhaps of whatever their revenue, their income is, and adjust the ratio of, how much they put into housing as compared to maybe past times. So if we can stay steady at just under 7, with the increase in listings, demand will catch up. Again, the fundamental looks good for a healthy market for what I'm looking at as the balance of 2024 based on these numbers.
All right. Well, that does it for within the city limits. Let's talk outside of the city limits. We'd like to break them apart because they are really separate entities. Although even lumping in a whole bunch of other suburbs into one is probably not ideal. So if you're thinking about selling or buying in a specific neighborhood, go down to the comments. You can schedule a call with us or just reach out to us with our, our phone and email are on there. I would be happy to talk about your specific area because real estate is hyper local. And we really have to drill down, not even sometimes just to the zip code, but to the neighborhood and really see what's happening in your price point in that area. So we'd be happy to chat with you if you want to know more about your specific area. But let's talk about the suburbs around Austin and see what's happening. So monthly housing inventory here, also around 4 months, a little bit higher if you're going back and looking at the 12-month average. And again, this is based on way more listings, 9,300 active listings outside of the city, just because it is a much larger area.
And so here you can see the number of sales per month down significantly year over year, a little over 12%, a little bit of a bump from the previous month. Going to keep a close eye on this one, David, over the next couple of months. If we have that rising inventory and dwindling of sales, that's not a good formula for our homeowners that are looking to maximize their gain when they sell their property, home prices, and so forth. So we'll keep a close eye on the number of sales per month and report accordingly.
And the average sales price, just down 0.2% year over year, down 0.5% month over month. Well, one thing I'll say is if you go back and look at the all-time high, which is actually in June, it looks like, for outside of the city limits, but it's down, I think I did the math, like 13 or 14% from the all-time high. So it is down a little bit more outside of the city limits than it is within the city limits. But still pretty good stability here with pricing. As you can see, it's been pretty consistent and up, from the beginning of the year.
And particularly when you look back a few years, 2020, 2019, that's really the trend that will continue over the 5 to 10 year forecast going forward. That's my prediction. Okay. I'll just call it a prediction if you want, a forecast that 10 years from now, when we're running the numbers, we're going to see price appreciation that's been in line with our historical price appreciation, not relative to the peak market that was an aberration and, an historical event. So I'm looking back 2020, 2019, those numbers look pretty darn good.
And the number of days on market is down both year over year and month to month, the same. And, that's good with seasonality to see that the days on market are going down. And we'll continue to track this as with everything else.
Number of new listings, way up. And if the demand, as we've been saying, can keep up, well, that's fantastic. So we talked about this with the number of sales and so forth. So it's a dynamic supply and demand. It's not any one stat. And we'll be keeping a close eye on the number of new listings outside the city limits.
And then the sale price to list price ratio, incredibly flat here. Again, stability, not much to report there. And I think one of the things that's been talked about a lot recently is this, the first time ever, well, I don't know about ever, but at least in recent history, there have been more people moving out of Travis County, which is basically pretty close to what the city limits of Austin are, than there have been moving in. Now, the population is still growing because of births. And, I think to me, when I hear that, it's just probably a affordability that people are saying, okay, well, I can move out to Williamson County or Hayes County and afford more home, get more for my money. And so those areas are still growing, the suburbs, and that's reflected in the numbers we just went over. And I don't think it's really anything to worry about. As I'm looking at some of for the city of Austin, which is really my focus personally, where all my investments are, because, I look at the trends and you start to see Austin, it had dropped off a lot of those lists of like best places to live and places that were affordable. And it's starting to move its way back up on those lists, which I think is good. The fact that rents dropped, there was a lot of multifamily housing built within the city limits. And so we were one of the few markets that saw rents actually drop over the last year, which, if I'm somebody like I was in my 20s thinking about moving to a new city, I lived in New York, I was like, where else can I go? And I look at some of the places that are options and I look at Austin, oh, wow, rents are down. It's more affordable than it has been. It still seems like an awesome place to go. And we're attracting people in their 20s. And then like a lot of like my friends and I, we came in our 20s, we loved it, we stuck around. And it creates a good long-term resident of the city. Not everybody sticks around. So I think we're in a really good place for the long term. And I'm really still very bullish and positive on the prospects for Austin over the next
decade. There's an old saying in real estate, as I'm sure you know, David, drive till you qualify. And so, from my perspective, those numbers of a net outbound migration are only half the story for the growing population outside the city limits, which is still easily commutable by any standards. So it's just a reallocation rather than an actual phenomenon.
Yeah, agreed. Well, if you have any questions, throw them down in the comments. We try to get in there and answer all of them. If you got a lot out of this, give it a like and send it to a friend. And go ahead and subscribe so you can get updated with our next monthly update. And if you want to chat with us more about real estate, you're thinking about buying or selling, go ahead and shoot us a message, and we'd be happy to talk with you more. Thanks for joining us, and we look forward to seeing you next month.